Hello friends, my name is Deepak and today I have a prominent certified public accountant from Fremont, Mr. Sanjiv Gupta with us in our studio. And today I'm going to talk to him about a very exciting topic, and that is about business. Business means make money. So a lot of people in America make a lot of good money. And I want to have Sanjiv ji kind of point out some of the year-end strategies. I mean, we are almost at the end of the year and we want to know how we can reduce our taxes. If you're doing a home-based business, a small business, a part-time business, you are a restaurant owner, maybe you're a hotel or a motel owner. So if you're a business owner, how you can reduce your taxes. And once he answered that for us, I'm going to talk to him a little bit about for people who are thinking about starting new businesses, how his office help with people who are looking into starting a business, maybe financing their business, maybe they're going through a loan process, getting a loan, what kind of stuff they should watch out for. So all those kind of questions coming right up. So Sanjiv ji, thank you very much for coming to the studio.
Thank you, Deepak.
And if you can kind of go over some of the year-end tax strategies for people who own business here in San Francisco Bay Area.
Yeah, first of all, the tax strategies for any business, whether it's an existing business or new business, has to have some component of tax benefits, like the tax savings.
Right.
And the best part to have those savings is to come early in the year, not at the end of the year. And not at the, when I see people walking to my office, they say, I made so much income.
That's good.
And I don't want to pay taxes. Well, I asked this question to them. Well, if you don't want to pay taxes, everybody does not want to pay taxes legally. Well, legally what they want to pay, they want to pay. But if you want to avoid paying, if you want to pay less taxes, you need to plan. Why you coming after at the end, very end of the year or next year when it's time for filing the taxes? Because the strategies, you don't have much space to do any strategies there. So what is the time, what they have to look within this period, what they can do for their businesses, whether it's existing business or small business or new business. Okay, so the number one strategy they have to look is always at Section 179 deduction. What is 179 deduction means? 179 deduction is property investment, business property investments or equipment purchased during the year. Now that deduction has been which was very high, $500,000, even 750,000, then it went to $500,000. Today it stands at $500,000, dollar to dollar value. You can take it, you can get a deduction 136,000, 39,000 this year. This is going to go down next year, 25,000 only.
Wow.
If the Congress does not act.
Fiscal cliff. So if we go over the cliff, we're screwed.
Yeah, so this 10 days, 9 days, whatever you have for the remaining period, go and buy something. Go and buy equipment if you need one. Go and buy a tractor if you need one for your business. Go and buy computers if you need one for your business. Go and buy a luxury SUV for your business if you need one. So you have to go forward. Now, when a lot of people say, is it necessary to put total money into that equipment, or I can finance it? See, the title should be in the name of the business. Whether you put 100% or you finance for 100%, doesn't make any difference. From the tax and financial point of view, it always makes sense to finance it and get 100% deductions. So basically, time is running short. You have $139,000 worth waiting for you to invest in the equipments. If you're always looking to buy something, this is the time. Go forward, buy it, get a deduction on your taxes if you make a lot of money. And as I said, even if you don't have money, you can finance it and still get the deductions. So 179 deduction is the first area where you need to look at it. The second area is the bonus depreciation. As I said, 179 is 139,000. Bonus depreciation is 50% of the full value of the equipment that you bought or the car that you purchased this year. So let's say, for example, you bought a nice luxury SUV car for, let's say, $60,000. The weight of the car is more than 6,000 pounds. We call it as a gross value weight rating, GVWR. It's a SUV. It's a sport utility vehicle, and you can finance it 100%. You will get a deduction of $30,000 bonus depreciation.
Basically half of
the value. Or you can do a Section 179 for $25,000. And for the balance value, that is $35,000, you get a bonus depreciation of 50%. That's $17,500 plus normal depreciation. You're talking about $43,000 to $44,000 from a tax return by buying a vehicle for $60,000. That result in a net tax saving, assuming a tax bracket is 25% of at least $12,000 saving, federal and state. So you think of this is a great time to invest in this equipment. So you're always thinking of buying something, doing something. This is the time. Or if you don't have cash flow, again, people do say they don't have cash money, they can finance it, they can put on a credit card and buy it. The credit card is still cheaper. The interest on credit card is, let's say, 10%, 12%, but you're saving like 25, 30, 35%.
And the interest you pay on the credit card is probably deductible as well, right?
It's deductible as well. And moreover, there are cards which are giving 0% till a certain period.
Right.
9 months, 10 months. So we have to use all the system.
Right.
Not having cash is not a solution. You still can generate sufficient cash to get the tax deductions. So 179 deductions, bonus deductions, then bonus to employees. If you want to keep your employees' morale high and make them happy this year, declare the bonus. Declare the bonus in accrual. If you are maintaining your books on accrual basis, you can declare the bonus as of December 31st. You need to pay the bonus by 2.5 months, let's say March 15th of the next year, to get a tax deduction on the bonus you have done this year. Or if you are cash basis taxpayers, you can make the bonus on your paycheck, on their paycheck, and they will be happy to do it. So you can declare bonus. You can send invoices early. Like if you are on accrual basis cash taxpayer, you can start sending invoices today because you want to generate more income this year as compared to next year. Because the next year Obamacare is going to come in, you have to pay 3.8% increase in taxes on the net investment income and 0.9% increase on the wages and investment income, wages and self-employment income. So you're talking about 4.5% increase in taxes, plus there will be increase in state taxes of about 2 to 3%.
Almost 7%.
That is just if nothing is done. And of course, the medical expenses are increasing from medical expense deductions increasing from 7.5% to 10% of AGI. So you will not be able to take the deductions. And child FSA plan, the FSA plan which was allowed $5,000 is going to come down to $2,500. So already those things are happening next year, 2013. So you will lose those benefits. So try to maximize the income this year as compared to next year. So this is reverse planning. We call it as a reverse planning for this year because this is like crazy year. So you can look at it sending invoices earlier if you accrual basis, getting the more income this year like cash basis. And the thing is about the buying the car, taking all the deduction on your taxes. Make sure that the tax professor do understand about those strategies. And the other thing about the new business, if you are going to start a new business, I see a lot of people doing product development, doing cloud computing. They're doing some 2-3 people come together, start buying something equipment, doing some research. Of course, you can claim up to $5,000 in expenses from the tax returns if you do a startup business. So definitely you can claim that benefit as well. So it's not that you don't have a lot of things, you still have a lot of things to do. Just you have to make sure that you contact your tax professional, your CPA, I will say, not a tax professional, a CPA, which is better organized and expert in this area, and go over the stuff that you have and plan it for the rest of the days in the year, so that you can lower your taxable income and pay less taxes.
Now, Sanjiv, when you started out talking about this topic, you said equipment and property. So can businesses invest in property as well?
No, great question. So business can invest in properties. There's nothing wrong in it. What you have to do is you will not get dollar to dollar deduction for property you buy, but you can get a dollar to dollar deduction for the improvements inside the property you buy.
Okay.
So if you
buy a land and you build a house.
If you buy a land and make a building, construction of a building on it, the building improvements inside it you will be getting dollar to dollar deduction based upon what you are doing inside the building.
I see.
So, and this year is a particularly good year for doing the improvements in the building because they give a 15-year time period for depreciation. Otherwise, it's 27.5 to 39 years of depreciation, which is far less as compared to 15 years. And there's more bonus depreciation available if you do a cost segregation analysis of the improvements of the improvements done inside the building. So definitely a lot of avenues are there.
Okay. Now, Sanjeev, since we are on this topic, I also want to bring out somebody who is starting out a new business. How does your office help this person?
Yes. See, a lot of time people do come to our office. They say, I'm looking to buy a franchise. So first of all, I tell them, are you really ready to buy that franchise? Do you really have time to look at the franchise model? who is going to work at a franchise model? If you have all those things correct, definitely franchise model is a good way to start a business because they already have established procedures. Of course, you make very less money because they have controls also, and their royalties and everything will be there, but it's a good start. So if you have cash flow in your pocket, if you have time to devote something to do a franchise business, and you want to do something for yourself long-term basis, because if you're a W-2 employee, you're working just for the employer. You're not doing something for yourself. And as I said, only the if you're the employer and if you're a business owner, you can take more tax benefit because you're running a business. W-2 employee, there's not much. You can do max is 401k, the HSA plans, and that's pretty much it. So it opens a new avenues. It gives you something to fall upon. It builds up business credit history for you, and so definitely it's a tax write-off. A lot of things inside the franchise business is a tax write-off. So definitely, if you're looking to start a business, franchise is a way to start with it. Or you can start a business yourself. If you are in IT, as I said earlier, you're in IT. You can do the developments, R&D. What needs to be done. Like you can get $5,000, and every year you can get some losses, like depending upon how much you get receipts and everything. Of course, the IRS allows you 2 years in losses. The next 3 years you need to report. After that, you need to report some gains. So they know the IT is Bay Area is full of IT professionals, and they definitely look at those aspects. So again, the fear of getting audited should be out. Keeping good receipts, good documentation is the key.
So there you go, friends. If you are thinking about starting a new office, you can definitely give Sanjiv ji a call. He can guide you to see what kind of franchise might be proper for you. He can guide you what kind of business structure might be right for you. He can guide you how you can reduce your taxes throughout the year while you're operating this business, so he can help you out with that. He can refer you to proper professionals who knows what they're doing. You know, for example, maybe you need an insurance, maybe you need to borrow some funds against your 401k plan, or maybe you need to do some sort of other financial planning. So he has, being in his field, he had a lot of people he worked with, and he can guide you to the right person. I always ask him whenever I need some help, so I'm pretty sure he will do the same for you. You can reach him at his Fremont office. That number is 510-825-7563. Like I have always mentioned, he has now a new office in Sunnyvale as well, and hopefully soon we'll have another office coming up in Dublin, so we're looking forward to that as well. But if you are international, perhaps you are in India or Cayman Islands, like he said earlier, you can definitely make a telephonic appointment with him. You can reach him at 510-825-7563. But last time I asked Sanjiv ji, see if he can start bringing us a joke of the day. So hopefully he has that for us today.
Yeah, definitely I have something for you today, Deepak ji. So the joke runs like this. The IRS officer sent a notice to a person to come and see him with all his documentation. So he wants to verify some elements of his tax return. So the person went to the IRS office with all the documentation well prepared. The IRS officer saw him and say, "Okay, have a seat." And he sat down and he started looking at his tax return. He said, "Mr. John," John was the name of the person, "everything looks okay, John, but I see that you're claiming on your tax return a dependent. And on your tax return you marked as single. Do you think it's a mistake?" Mr. John said, "Yes, it was a mistake that time."
So there you go, my friends. Hopefully you did not make any mistake, and Sanjiv ji is here to avoid having you make a mistake. Once again, that number to his office is 510-825-7563. You can reach us online at sanjivcpa.com. But thank you so much for watching this segment. If you have an idea in mind, you want us to bring a question on air, please shoot us an email or go online and fill out the little contact form, and we'll try to answer your questions next time we are on air. But thank you so much for watching this segment. We'll catch you next week. Till then, thank you and goodbye.
Thank you.